Today's tech news moves fast, but understanding it shouldn't be hard. That's why Snarful Solutions Group brings you Connecting the Dots, where we break down what's happening in tech and why it matters to you. Now, let's dive in with your hosts.
Imagine handing ChatGPT the password to your brokerage account, giving it just a loose set of instructions, and telling it to go make you money while you sleep.
Right, which sounds like an absolutely terrifying sci-fi premise.
It really does. But as of this morning, that is a literal reality. We are stepping into an era where artificial intelligence doesn't just, draft emails for you. It has its own wallet, its own budget, and the autonomy to spend real money.
It's a fundamental shift in how digital systems operate. The infrastructure for machines to pay other machines is going live today.
And it's happening on the exact same day that the public markets are being tested by the largest, most complex initial public offering in human history. Welcome to Connecting the Dots.
This is the deep dive where we take the day's biggest headlines, strip away all the jargon, and figure out what they actually mean for you, your investments, and your daily life.
I'm Alex.
And I'm Morgan.
And we are broadcasting live from Snarful Solutions Group, right here in Sacramento, California. Today is Friday, 2026-06-12.
Yes. And before we unpack the massive AI shifts in that historic IPO dominating our Morningstar Tech article report today, let's get you caught up on your morning numbers.
You will definitely want to stay indoors today if you're in Sacramento. It is a total scorcher out there.
Oh, absolutely. We're looking at sunny skies and a high of 101 degrees Fahrenheit with winds blowing somewhere between 2 and 13 miles per hour.
So yeah, keep the AC running. Shifting over to the financial markets, yesterday brought some massive movements.
Really massive.
Yeah, the Dow had a huge day, up over 876 points to close at 50,848.75. And the S&P 500 followed suit, jumping 106 points to finish at 7,394.30.
Over in the crypto markets, things were slightly cooler, though. Bitcoin dipped by about $222 yesterday, opening today around $63,331.05.
And a quick breather for our local sports fans out there. There were no games yesterday for the SF Giants, the Oakland A's, or the Sacramento Kings.
Which is probably for the best.
Totally. Yeah. You can take a day off from stressing over the box scores, which is good because you are going to need all your mental bandwidth for the monumental tech shifts happening today.
That is absolutely true. I mean, the entire financial and tech world is just laser focused on a collision of two massive forces right now: the rise of autonomous AI agents and a $1 trillion market debut.
Today's episode is brought to you by Strong Coffee, the premium instant coffee that tastes like a traditional brew, but is packed with 15 grams of protein, MCTs, and adaptogens like ashwagandha. Get clean, sustained energy without the jitters. Use promo code SNARFUL for 20% off at strongcoffeecompany.com.
Let's get right into our tech report. We are tracking 3 major stories today that might seem, separate at first glance, but they are actually deeply interconnected pieces of the exact same puzzle.
Okay, let's unpack this. Story number 1. The AI economy just got its own wallet.
It did. Coinbase officially launched a product called Coinbase for Agents.
Right, so in plain English, they've built a tool that gives an AI assistant, like Claude or ChatGPT, its very own access to a crypto account. It operates using something called the BY402 payment protocol.
Exactly. But before we get into the weeds of the protocol itself, we have to talk about the mechanics here.
Yeah, because I look at this and my brain just starts flashing red warning lights. It feels like giving a corporate credit card to a piece of software living in the cloud.
That's a very fair reaction.
Right. My immediate concern is the hallucination factor. Like, what physically prevents the AI from glitching out, making a terrible bet on some random volatile coin, and completely draining your account?
Well, that is the crucial hurdle, and it's exactly why the engineering behind this launch is focused almost entirely on guardrails.
Okay, so it's not a free-for-all.
Definitely not. You aren't just handing over the master keys to your net worth. The platform forces you to run the AI in an isolated sandbox, a sub-account. Yeah, you establish strict, hard-coded boundaries on the blockchain itself. For instance, you set session caps, meaning the AI can only operate for a designated window of time.
Oh, that makes sense.
Right. And you set per-trade size limits, and you institute overall spending controls. The AI literally cannot see or access your main holdings.
Okay, so it's basically giving your kid an allowance in cash rather than handing them your platinum card. Even if they make a bad choice, the damage is capped at $20.
Precisely. But what's fascinating is how the AI actually executes these transactions. This is where that BY402 payment protocol comes in.
Right. How does it actually pay for things?
Well, normally when you use a blockchain network, every single transaction requires a small network fee, commonly known as gas.
Sure, gas fees. They add up fast.
Exactly. If an AI is making thousands of micro decisions a minute, say buying a tiny sliver of premium market data, adjusting a hedge, and executing a trade, traditional gas fees would just instantly bankrupt the operation.
Yeah, that would bleed the account dry in minutes.
So Coinbase built this to run on the Base network using USDC stablecoins in a way that is entirely gasless.
Wow, gasless.
Yeah. The infrastructure absorbs that friction, allowing the AI to just operate fluidly without bleeding money on microfees.
I see. So you can give a specific mandate, like telling it to constantly rebalance your portfolio to maintain, say, 60% Bitcoin, 20% Ethereum, and 20% Solana, and it just works away in the background.
Exactly, completely autonomously.
But I do have to push back a bit on the novelty here. I mean, we've had algorithmic trading for decades on Wall Street. Why is this sudden push for AI wallets such a massive headline today?
Because we are watching the birth of the agentic economy. Algorithmic trading relies on rigid, pre-programmed rules. If X happens, do Y.
Right, it's just code following instructions.
Exactly. But an AI agent is autonomous and adaptive. We are transitioning from a world where you use software to complete tasks to a world where software does the tasks for you entirely on its own.
That is wild to think about.
It is. But for these agents to be truly autonomous, they need to be able to transact. They need a budget. Think about it. Your digital assistant won't just scan your calendar and suggest a flight for your upcoming business trip.
Okay, so what will it do?
With its own wallet, it will negotiate the price of the ticket with the airline's AI agent, purchase the flight, and pay for the specific data API required to check the weather at your destination. And it does all of this without you ever clicking a single button.
And Coinbase is trying to position itself as the underlying bank for all that machine-to-machine commerce.
Exactly. It is a race to become the cash register for machines. I mean, in just the last week, MasterCard launched Agent Pay, MetaMask shipped a wallet built explicitly for AI agents, and now Coinbase is wiring in USDC as the default currency for machine transactions.
So whoever owns the rails that these agents use to pay each other is going to collect an unimaginable toll over the next decade.
Oh, absolutely. The revenue potential is staggering.
Which brings up a massive logistical problem. If AI agents are going to be making millions of autonomous, complex financial decisions every single second of the day, the immediate question becomes, where is the raw computing power for all of this coming from?
Right. The physical hardware.
Exactly. And that brings us to our second story today. Because when you talk about laying the physical infrastructure for the future of AI, you have to talk about SpaceX.
It is easily the biggest financial news of the decade. Today, SpaceX shattered global records with its $75 billion initial public offering.
Which is just an enormous figure.
It's massive. They priced their shares at $135 apiece, securing a staggering $1.77 trillion valuation.
A trillion with a T.
Yes. The ticker symbol is SPCX. It opens on the NASDAQ today, and yes, this valuation makes Elon Musk the first potential trillionaire.
Wow. You know, to even wrap your head around a number like $1.77 trillion, you have to realize that you aren't just looking at a rocket company anymore.
Not huh?
SpaceX is effectively three massive, separate businesses stitched together under a single stock ticker.
Right, so let's break those down, because the mechanics of each are critical. First, you have the legacy business, which is launch operations.
That's the rockets shooting into space part.
Exactly what you picture when you hear SpaceX. Right now, they control a dominant 85% of all the mass that the entire world puts into orbit.
85%. That's a total monopoly.
Pretty much. They achieve this by fundamentally changing the economics of spaceflight with reusable rockets. With the Falcon Heavy, they have driven the cost of getting payload into low Earth orbit down to just $1,400 per kilogram.
That sounds cheap for space travel, but give us some context on how disruptive that actually is.
Well, NASA's historical average was $18,500 per kilogram. SpaceX achieved a 92% reduction in cost simply by landing the boosters and flying them again.
Which is an undeniable engineering marvel. But, you know, the launch business alone doesn't justify a $1 trillion price tag. That's where the second business comes in, right? Starlink.
Yes, Starlink, the satellite internet constellation. It is the absolute cash cow of the operation. By blanketing low Earth orbit with thousands of satellites, they've bypassed traditional telecom infrastructure entirely.
And the revenue numbers back that up.
They do. In 2025, Starlink brought in $11.4 billion in revenue from over 10 million subscribers spanning 164 countries. More importantly, it is the only segment of SpaceX that is currently generating free cash flow.
Okay, so that's two legs of the stool, and then there's the third leg. This is the piece that directly connects to our discussion about AI agents needing immense computing power.
Right, the XAI component.
Exactly. Quietly, SpaceX has become one of the largest compute landlords on Earth. Back in February, SpaceX formally absorbed XAI in a massive merger. They built the Colossus I supercomputer down in Memphis, which is an absolute behemoth wired with 220,000 NVIDIA GPUs.
It's just an insane amount of hardware.
It really is. And they are leasing that entire cluster out to other AI giants. They have a deal with Anthropic for $1.25 billion a month and another with Google for $920 million a month.
That's incredible.
Yeah, going forward, that annualizes to roughly $26 billion just in compute rentals alone.
It's an unprecedented pivot, really. They took the capital generated by space internet and used it to corner the market on raw artificial intelligence processing power.
And the returns for early investors who believed in this three-part vision are just historic. Take Founders Fund, the venture capital firm.
Oh, their payout is legendary now.
Right. They invested about $600 million into SpaceX in the early days. At today's IPO price, their 3% stake is worth over $50 billion. That is an 80x return.
Wow.
Yeah. Andreessen Horowitz is sitting on over $10 billion. And roughly 4,000 everyday SpaceX employees just woke up as newly minted millionaires today.
Good for them. But as staggering as those windfalls are, the retail investor looking at this stock today really needs to look closely at the underlying financials.
Exactly, because here is where I really have to push back on the hype. When you look under the hood at all this Starlink revenue and these multi-billion-dollar compute deals with Google, there is a glaring red flag.
The net loss.
Right. If they are making all this money, why did SpaceX post a massive $4.9 billion net loss in 2025?
Well, it comes down to something analysts are calling the Musk premium. Investors are clearly not valuing SpaceX based on its current balance sheet or its net profits today.
So what are they looking at?
They are valuing it based on the total addressable market, which the company boldly claims is $28.5 trillion. The reason they posted nearly a $5 billion loss is that the massive profits from Starlink are being entirely swallowed up.
Swallowed up by what?
By future bets. They are shoveling that cash into the furnace of cash-burning projects, buying hundreds of thousands of those incredibly expensive NVIDIA GPUs for AI infrastructure and funding deep space rocket research and development. Starlink is essentially bankrolling the distant future.
Ah, okay. And for listeners who follow the crypto space, there's a really fascinating intersection happening right now with this.
The tokenized shares?
Yes. SpaceX currently holds 18,712 Bitcoin on its balance sheet, which is worth just under $1.2 billion. Leveraging that crypto-friendly stance, a company called Backpack Securities is actually launching a tokenized version of the SPCX share on the Solana blockchain today.
That is so wild.
Isn't it? It means you will be able to trade a digital token backed one-to-one by a real SpaceX share 24 hours a day, 7 days a week, entirely outside the bounds of traditional market hours.
Which perfectly illustrates how traditional finance and decentralized crypto rails are merging into a single ecosystem. But that incredible $1.77 trillion valuation leads us directly into our third story today.
The risks.
Exactly, because as you pointed out with that $4.9 billion net loss, the foundation here is carrying an incredible amount of stress. There are massive systemic risks embedded in this company that the market will have to digest.
So let's examine those risks, starting with the debt, because the leverage here is staggering. SpaceX currently sits on $29.1 billion in total debt.
That's a heavy load for any company.
It is. But the real shocker tucked inside the IPO filings is the revelation of a $20 billion bridge loan. They used this loan to retire XAI's legacy debt during the merger. But here is the kicker. Getting ahead of myself there. Here's the kicker. That $20 billion must be repaid within 6 months of receiving the IPO proceeds.
Wow. That completely fundamentally shifts the narrative of the $75 billion capital raise.
It really does. It's like taking out a massive multi-million-dollar mortgage on a new house just so you can pay off your maxed out credit cards right before you throw a lavish housewarming party.
That is a great analogy.
Thanks. A massive chunk of the money they are raising from investors today isn't going toward building new rockets or buying more servers for AI. It is going straight out the door to debt refinancing.
And the rockets they are building, the entire future growth model hinges on Starship. They burned through $3 billion on Starship R&D in 2025 alone.
Just burning cash.
Exactly. They project it will carry commercial payloads by the second half of 2026. But Starship hasn't actually delivered a single commercial payload to orbit yet. If that timeline slips, the entire valuation stumbles.
And that immense ticking clock of financial pressure adds some very necessary context to a fascinating comment made by SpaceX President Gwynne Shotwell just this morning.
Oh, I saw this.
Yeah, in an interview, she was asked about persistent rumors of a potential mega merger between Tesla and SpaceX. She noted that the two companies already share incredible synergies, like they collaborate heavily on custom shipmaking for AI, robotaxi infrastructure, and humanoid robotics.
Which is true, they do share a lot of tech.
They do. But then she added a very pointed phrase. She said that combining the two entities might make Elon's life a little easier, actually.
That is a wild thing to put out into the universe on the very morning of your IPO.
Right. Basically saying, hey, buy our stock today, but we might just fold it into an automotive company next year.
Yeah, casual mega merger hints on IPO day.
Exactly. But practically speaking, I have a mechanical question about today's launch. We have this enormously complex company, heavily indebted, hyped beyond belief. Retail investors alone have placed over $100 billion in orders for a relatively tiny allocation of shares.
The demand is just off the charts.
It is. So how does a stock with this much volatile energy actually open on the stock market today without completely breaking the NASDAQ system?
Yeah.
I assume you don't just flip a switch at 9:30 a.m. and let chaos reign.
You certainly don't. And understanding the mechanics of how a mega IPO actually opens is crucial. The NASDAQ relies on some fascinating, highly orchestrated market plumbing to prevent immediate systemic failure.
Okay, how does that work?
Well, they use a piece of technology called the book viewer, and they assign what is known as a stabilization agent. That's usually one of the lead underwriter banks from the IPO.
Right, I've looked into this, and I know their job is essentially to prevent the stock from free-falling at the opening bell. But my confusion here is, how do they simulate demand and find the opening price without artificially manipulating the market?
It's a great question, and it's all about data aggregation, not manipulation. The stabilization agent isn't inventing ghost orders. Through the book viewer technology, they can see every single legally binding bid and offer from both institutional and retail investors in real time, down to a 5-cent increment.
So they see the whole board.
Exactly. They run massive simulations across the order book. They ask the algorithm, if we open the stock at $140, how many total shares will trade? What if we open at $150?
Oh, I see.
Yeah, they are searching for the exact clearing price. That specific dollar amount where the maximum volume of shares can change hands instantly with the minimum amount of volatility. Typically, about 8 to 10% of all the IPO shares will trade in that single massive opening cross.
So that's why an IPO stock rarely actually starts trading right at 9:30 a.m.
Yeah.
They might hold it back until 10 a.m. or even noon, just continuously calculating to ensure the buy orders and sell orders match up perfectly before letting the public trade it.
Precisely. It is a massive matching algorithm. But even with that preparation, human emotion takes over once the stock is live.
It always does.
Yep. If the hype causes the price to start swinging wildly out of control, the NASDAQ has an automated mechanism called LULD, which stands for limit up, limit down. It's a physical circuit breaker.
How exactly does that get triggered?
If the stock price jumps or drops by 10% within a rolling 30-second window and stays locked at that extreme for 15 seconds, the exchange automatically halts all trading for 5 minutes.
So it essentially forces the market to take a breath.
Exactly. It pauses the panic, lets the stabilization agent run a brand new auction to find a stable clearing price, and prevents a total market free fall or a runaway bubble.
Wow. So synthesizing all of this, what does this actually mean for you, the person listening right now? Why should you care about the deep mechanics of the NASDAQ or the debt structure of a space company or whether an AI has a crypto wallet? You should care because these events are physically reshaping the infrastructure of your daily life. Whether you are an investor whose retirement fund just gained exposure to SpaceX, a tech worker whose company relies on AI tools powered by the Colossus supercomputer, or just an everyday person relying on global internet connectivity, this company is laying the tracks for the next decade of the global economy.
It's touching everything.
It really is. If this IPO succeeds and holds its valuation, it will open the floodgates for other AI giants like OpenAI and Anthropic to go public, completely transforming the stock market. But if it fails beneath the weight of its own debt, or if a mega merger with Tesla creates an unprecedented monopolistic superpower, the ripple effects will be felt deeply in your personal portfolio, your workplace, and your digital privacy.
Before we wrap up, a quick thanks to Old Glory, an iconic music and sports fan merch store, perfect for the techie in your life. Use promo code SNARFL for 15% off at oldglory.com. To briefly recap the massive shifts we've explored today, we are stepping across a threshold into an agentic economy where AI systems now have the crypto infrastructure to hold bank accounts and execute financial decisions autonomously.
Yep, the machines are buying things.
Exactly. We are watching the world's premier space launch company leverage its orbital dominance to become the most powerful AI compute landlord on the planet. And today we are seeing the public markets tested by record-shattering valuations, complex debt structures, and the looming possibility of trillion-dollar mega mergers.
It's an incredible amount of information to process. But I want to leave you with a final lingering thought to mull over today as you watch the ticker. We spent time unpacking how SpaceX's staggering $1.77 trillion valuation is largely propped up by two things: the distant promise of massive AI revenue and the success of the untested Starship rocket.
Two very big, very futuristic bets.
Exactly. So given how heavily the entire global tech ecosystem is currently leaning on these incredibly capital-intensive bets, what happens to the broader tech market and your personal investments if either of those massive promises experiences a major, undeniable failure?
It is the defining question of this market cycle, and one we will all be watching incredibly closely as the opening bell finally rings today.
We're here to help at Snarful, so reach out on our website if you have any more questions.
That's a wrap on today's top stories. Remember, tech doesn't have to be complicated, and we're here to help connect the dots. If you've got questions or want to learn more, visit us at snarful.com. Thanks for listening, and we'll catch you next time.